All right, hello everyone. My name is Christian Arce, and this is another episode of Real Estate Talk, where I talk to fellow Facebook friends in the real estate and lending industry to give you a different perspective of what is going on in the trenches and to share some of the positives and inspirational tips, ideas, and opinions from real estate people in our industry, brokers, lenders and investors that there are every day grinding and are there doing it every day, pushing through this COVID-19 crisis, and also just to encourage and uplift people and really be grateful to be here with you all today, just to share what my guest has to say. So please like and share if you will. I will really appreciate it on Facebook, YouTube, and Instagram, so we can reach out more people looking for this information. All right. Thank you for that in advance. And now I'm really excited to talk to my next guest. I got the pleasure to meet him personally not long ago at a networking event right before the quarantine started. He's a private lender with Anchor Loans, and I immediately thought about sharing his experience with you today, simply because a lot has changed in the last few months, and you know, as every real estate investor need to know what is going on in the lending industry since this whole crisis started, right? So we're going to be asking him about everything that he's doing today and how is he helping other real estate investors to stay on top of their game during this crisis. Okay, everyone. So here is Alex Fuentes, everyone.
Hi, Christian. Thanks for having me. I
Hey,
appreciate it.
Alex, how are you?
Doing fantastic. How are you doing today?
Great. Thank you very much for for being here today with me. Thank you for accepting the invitation and to just sharing with us, being taking a little bit of your time to share with us what's going on in the market today. So
Thank you for having me.
no, no, absolutely, man. So Alex, as you know, I know you're a busy man, so we're gonna try to get right to it. But before that, I just wanted to share with everyone why I invited you and I talk with me today. And that was not only just because what you do in real estate, what you do in lending, but also just to bring a positive message to other new and seasoned investors out there. We're living in a moment that a lot of fear is being transmitted to people through all the channels. Everything that is going on this weekend here in Chicago is being crazy, and and it's making things very difficult for a lot of people, right?
Absolutely.
I think that sometimes sharing a little bit of positivity and will definitely inspire some of the investors out there to get out there again and start grinding and start getting back into business. And we were actually just getting back into business, right? The
Sure.
government was just allowing a lot of the business owners to reopen, and this kind of happened this weekend that kind of revolutionized a lot of people out there, a lot of our friends right here in Chicago
Sure.
and around the country. So everything, it's been very chaotic. So the idea is to kind of give them a different perspective, talk about something different that they can, uh, get some ideas and some inspiration to get out there and start doing it again and start getting new deals, right?
Absolutely. And I think one of the biggest things that I like to kind of get across here today is not only with Anchor, but with other lending institutions, private lenders around the country, they are lending.
Right.
One of the biggest things that what I've seen over the last couple of months is there have been some that have suspended lending. They're coming back little by little. They
Right.
have changed some of the guidelines, and we can kind of cover some of those things here today. But
Yeah.
most importantly, as a real estate investor or broker that may be looking to place deals throughout lending institutions, not only here in Chicago, but throughout the country, the company I work for, Anchor Loans, but other companies, they are lending. As an investor, you're probably going to have to have a little bit more skin in the game in terms of what things used to look like, and we can kind of cover
Right.
some of those things. and some of the different intricacies of guidelines that they may be looking for now. But as an investor, this is a great opportunity. I know there's less deals out there right now, but there are still very good, viable deals out there. And it's a matter of doing your homework and doing your numbers a little bit more in advance to be a little bit more conservative in terms of what the end game might be on a particular deal. So the good news is, there's still deals out there. Real estate is still selling, and we are lending, and we're very, very, very busy during these times. So we're very fortunate for that.
Well, look, this is our goal today. So the idea is to reach those real estate investors, business owners out there that may need some direction, some ideas on how to get through this, and how to get the proper funding for their deals. And we're going to use this platform today to help them out. But, obviously, as you know, every real estate investor out there, we always tell them that it's all about your team, right? The people that you work with, and you need to get to know them a little bit. And so, why don't you tell them a little bit about you, Alex, about who you are and how you've been in the industry, what kind of bring you to lending, and what kind of attract you to real estate, so that way they can get to know you a little bit more.
Absolutely. So again, my name is Alex. I'm born and raised here in the city of Chicago. I've been in the finance game for almost 20 years. Former mortgage broker owner here locally of a couple different branches. Survived the 08, 09 bubble crash, if you will.
Right.
Decided to go in a little bit of a different direction thereafter. I've wholesaled properties. I've flipped properties. About a year ago, someone that I wholesale some properties with reached out to me, indicating that a company, Anchor Loans out of California, who's been around since 1998, was looking to expand, and they were looking at markets such as Chicago, Atlanta, Charlotte, in Texas, New Jersey. They were in growth mode. We did about 1.6 billion in business 2 years ago. I had a conversation with one of the partners and owners of the company, and as I kid around with all my friends, is that even though I have left the mortgage or finance industry, it always seems to be pulling me back. I had a conversation with them, kind of fell in love with the company, and said, "Hey, let's give it a run." That was prior to COVID and this whole chaos that's going on in our country right now. But I can very proudly say that not only the company that's very interested in bettering our communities and helping real estate investors grow their real estate investment business. It's a great company, and I'm happy that, one, we're still lending. Two, we are still helping real estate investors grow their business. At the end of the day, this is really what it's about, helping our communities as well as helping real estate investors, whether they be new investors, seasoned investors, grow their business in terms of different items that we could maybe bring to the table to help them either look at a deal, help them refer them to someone like Christian to get some business funding for their deals, as well as just looking at a deal and saying, "Hey, this is a good deal. We'd love to help you on it," and help them grow their business at the end of the day so we can fund those real estate deals to help them grow their business and better our communities. At the end of the day, that's really what it's about.
Yeah, absolutely. And the idea is that obviously a lot of investors have been, the seasoned investors, they know that some of the lenders that they've been working with in the last few years, some of them, they stopped lending. They're still open, but they're not lending very much, or they're not lending here in Chicago or whatever they are located. And at the same time, the new investors, they saw that reduction of a lot of lenders that completely closed their doors, right? So, and obviously, I met you last year, and obviously, you guys didn't close. You kept going. You kept lending. Obviously, you adjusted some of your guidelines, but you're still lending, and that is what is that is something that every investor, I think, needs to take into account when he's working with a bank. That when things get tough, like the way they got now, and you guys are still there, they're still lending and still open. That tells you a lot about the company and the strength of the company. That you guys are that your guys are working. So definitely is something that everybody has to take into account. So what type of deals do you usually concentrate on? What type of
So,
property?
so primarily, we are a fix and flip lender. We will do new construction as well.
Okay.
We do bridge loans as well. And I think those are the products that we kind of focus on. We do
Mhm.
some, right now, our main concentration is 1 to 4 units. We're not touching any commercial at this time. That's a COVID change. Anything 5, 10, 15, 20 units, we will do that pre-COVID. And I fully expect us in the future to get back to it. And I think that that's one of the things, whoever you use currently or whoever you've used in the past in terms of a private lender, some of the changes that we've seen are the private lenders they've made some changes. Property type
Mhm.
that they will lend on. And here in Chicago or cities like Detroit, the crime level, I deal with that on a daily basis in terms of lenders right now, they're being very conservative. From an as-is value, from an after-repair value. I've even seen some appraisals come back. We're starting to see a little bit of a pullback on some values from a conservative standpoint. And that is something when you're crunching your numbers as an investor, you have to take that into account. Yes, you can pull comps back 6, 12 months back, but they're really looking at what's gone on over the last 60, 90 days to see what trend is going to be happening from a real estate sale perspective on those numbers. So keep that
Okay.
in mind. But those are the concentration areas, fix and flip. Typically in our Chicago market, we're still lending 85, 80 loan to cost, depending on your experience. Some investors that are just getting in, they're going to have a little bit more skin in the game, 70, 75%, depending on the deal. And our new construction, we will go 75 or 80 loan to cost. The biggest thing that I'm seeing on new construction, I have a lot of people recently coming to me asking questions on new construction.
Mhm. Yeah.
You got to have some experience, ground up experience. If you don't
Right.
have it, you got to pull in a partner that's done some ground up experience, partner up on the deal. We're starting to take into consideration the general contractor and their experience on deals as well.
Right. Yeah.
And that is a big thing. If you're fixing and flipping or you're going to do new construction, your team around you is got to be really, really good in terms of all the guidelines that you're going to have to take on in terms of lending institutions now. They're starting to look at second and third or fourth level type things to make sure that the lender ultimately is in a safe position on who they're doing business with. The
That's
less
great.
experience you have, the more important that stuff becomes important.
Yeah, well, that's great because I mean that is part of what we were just talking about, creating your team. And honestly, the construction side of it is a huge part. Okay, and a lot of people sometimes they concentrate on finding the deal and looking for the funds of the deal. How are we going to finance the deal? But then they forget about the contractor and the construction side of it. How are we going to organize that and all that stuff? And sometimes when you're new, it's just a lot to go through, right? So it's a lot going on just one deal, and and that obviously that part of your team, the contractor, can actually make your deal successful, or can actually break it apart and just lose money, right?
Absolutely. Absolutely. It's very important. And I tell whether you're an experienced investor or a new investor, I ask them all the time, bring the deal to me. Let me take a look at it. I'll value it as is or give you a general idea of what I think a future value might be. And I'll ask them, what are your plans? What's your exit strategy? Is this going to be a buy, fix, and hold? Or is this going to be a buy, fix, and flip? So that I can get a true sense of what's going on the deal so I can be an advisor. If we're going to lend you money, that's the approach that I would like to take in terms of your emotions are in on every deal because you're just looking at the end of the day what your payday is going to be.
Right.
You have to kind of sometimes take a step back and say, hey, this might not be the best deal, or it might be a little tight for me. Or listen, you might be able to do 2 deals with, instead of going after that big fish, you might be able to do 2 smaller deals and less stress than having a project go 6, 8, 9 months, because you also have to take into account the permits that are going on now with some of these towns. With the whole COVID-19, I have investors coming to me saying, hey, I'm going to need more time on this because I can't get permits. The city's shut down.
Right.
We're opening up now, but I did experience that for a little while.
Yeah. Well,
And
and those
right now really is if you've been in a fix and flip and you did it 6, 8, 9, 10 months ago, and you got the property on the market, you don't want to stabilize it and rent it, you want to flip it, you really got to start that bridge refinance or end refinance. I would say 60, maybe even 90 days from your maturity, because we and other lenders are starting to look at where is that other loan at? Is that something that we want to take on our books and deal with the problem in 9 months or 12 months? And the longer that you wait, I'm seeing a lot of these hard money or private lenders, they're getting very aggressive on that maturity date, fees, penalties, things of that nature. So if you're in one of those loans now and you've reached a 9-month mark and your term is 12 months, feel free to reach out to me, or just a conversation, tell you what might be a good exit strategy to not put yourself in a position where the money you thought you were going to make on a flip is going to go away to fees for an extension. So I'm happy to help with that as well.
Okay, that's awesome. That's awesome. That's great. That's great insight, Alex, because that's what I was actually trying to communicate to these investors, because a lot of things have changed lately, right? And we were being used to in the last year. We were used to the 90% financing, and it was all nice and really easy to get in and out. But now, more skin in the game that we need. The cities, we gotta, watch out more also for the time frame that's gonna take. A lot of people, I've seen still a lot of people interested, right? I've seen a lot of investors that they're not stopping on the tracks. I mean, that they're still looking for financing options to do their deals all over the country. Okay, we work all over the country, so we see that from all over the place. But at the same time, they're not taking in consideration some of the things that you just said, right? That some of the cities are closed, or they're taking a lot longer to do these the permits. And at the same time, even for the purchase, sometimes there is delays because there is city stamps that is not everywhere, but the same way. But city stamps and city inspections, sometimes they need to be done prior to closing. That now a lot of the investors are not being able to make because all the trouble that we have now right now.
Absolutely. And I want to say is the bigger the investor, they may have an assistant or they may have an office manager that is handling a lot of these things for them. The individual investor or the newer investor that has to wear many hats on a daily basis, these are the types of things when you surround yourself with a good private lender that is going to point these things out for them in terms of, hey, have you thought of this? Have you thought of this? Have you thought of that? That's going back to the team. That being said, I think some of the biggest things, whatever level you're at as an investor in terms of the changes that we've experienced, cash is king. Your cash reserves is a very big factor right now. They are looking at things like, okay, you this is your down payment money. This is your rehab budget. Some lenders are looking at for 20, 25, 30% of the rehab budget to be liquid in a cash reserve account. And then on top of that, they're also looking for anywhere from 6, 9, 12 months of interest only reserves to be also liquid sitting in a cash reserve. Now with us, we're not requiring you put that in an escrow account. I have heard through the grapevine, some lenders are starting to require investors to take the rehab percentage budget as well as the payments that they're going to be making for the next 6 to 12 months and putting that in an escrow account. And for you, the investor, what that means is your money's tied up.
Yeah.
If you do another deal, your money's going to be tied up, and you got to get more efficient on these deals. That might mean smaller deals to make sure that they're not as long as rehab projects, so that you get in and out and get on to the next one. Does that make sense?
Yeah, absolutely. And in regards to those reserves, what type of accounts, or what type of things do you accept to prove as a reserve? I know that some lenders out there, they can also accept 401ks or stuff like that.
So a self-directed IRA, that's something that we can look at, and depending on that IRA, when it comes to stocks and bonds, with the recent COVID-19, we've seen a big hit on the stock market. So we can use them. It has to be liquid cash, meaning you can access that money tomorrow. It's got to be on your actual quarterly statement. It will say cash value. And what I mean by that is, if you call your whoever's managing your stocks and bonds and say, hey, I want to withdraw, I need this in cash, we can consider that towards the transaction. But other than that, checking, savings, from personal and from business, we can use right now.
How about whole life insurance?
Right now, no life insurance is being considered at this time. In the past, we have. Right now, it's not being considered.
Okay.
Checking, savings. I even have some people that come to me saying, hey, I own my house free and clear. I have a home equity line of credit. I can use it for cash towards the deal. It will not be considered towards a cash reserve for the rehab budget or the interest-only payments. But that being said, I have some people that they have silent partners. They're in on the deal. They may not be on the entity or the LLC for any particular reason, but they have a silent partner. We'll allow it. We'll accept it. But we're going to want to, these days, we're going to want to source it and verify where it's coming from and the purpose. Because we don't know if you got to pay somebody back, or maybe it's a second that you're getting on a property. I just had that scenario today. We'll accept the second. We just need to know about it. Because if you don't have any skin in the game as an investor, our terms might change just to put ourselves in a little bit of a safer leverage position.
Right. Great. So, and what about, if you have an equity line of credit, I mean, I know that you can't use it as a reserve, but you can actually pull that money from there, put it on your bank account, right?
I can
need some type of seasoning
towards cash to close.
Okay.
Cash to close. Towards your down payment, I can use those funds. As far as cash reserves for the rehab budget and future interest-only payments, because here's the thing, a lot of people can take it from a equity line of credit or from a family member, put it in the account, and then after we verify and we close the deal, they can withdraw and give it back to them. So we're careful with that.
Okay. So, but at the same time, I mean, the equity lines of credit are very liquid. I mean, you can write a check and that's it, right? So it's
absolutely. If it's yours, it's going to be more strengthful to the file.
Right. Okay. So now for some of the new guys, what are the things that they need to know about, their credit or their on top of the liquidity? We just talk about the liquidity that they need to have. How about their credit?
When it comes to new investors, what I usually tell them is get pre-approved, whether it's with me or anyone else. Get yourself pre-approved, because out of this market, when you see a deal, whether it's off market or on market, one of the first things that either a wholesaler or an agent's going to ask you for is proof of funds, or pre-approval. If not, your deal's not going to be considered strong to the seller and or to an REO property. Okay, so get pre-approved. It's a simple process. Make sure that we can lend to your entity. Make sure we can lend to you. If you got a recent credit report, let's take a look at it. If not, we'll get a credit authorization. We'll pull it. We're going to ask for some documentation in terms of the assets and cash reserves that I just talked about. I'll look at it. I'll get a general sense of what they're going to be looking for in terms of project size, down payment wise, depending on where our leverage is. If we're at 70, 75, or 80 for a new investor, I would tell them, you're going to be looking at 25, 30% of the project out of pocket. And that is a combination of down payment and rehab costs. So getting approved is very important, because before you run out there looking at properties, negotiating deals, you really want to get a general sense at can I get a fix and flip loan? There's a lot of private lenders out there that aren't even dealing with new borrowers. We are. I like to vet them a lot before they go out shopping, so that in the event, once I can determine I can lend to them, their entity, their cash reserve budget that they have, I'll issue them a proof letter or a specific proof of funds that they need, I'll provide that usually generally within a 24-hour period as well. And it's the safest way. I'll even go further, and I've had newer investors bring me a deal after looking at the as-is value, what the rehab budget is. I'll even send it through our system to get a general sense of what the ARV or the after repair value is going to be. And I'll look at the deal with them. I'll say, hey, this looks like a good deal. If there's a wholesale in the deal, that's okay. We're okay with those types of deals. I just want to look at it because it may not be as good a deal as they think that it is. And this is a relationship business. If I can help you grow your business and look at deals, I might tell you, hey, that's not a good deal. Let's look at something else. That's not because I don't want to close deals. That's because I want you to make money, but I don't want you to get so emotionally attached on a deal that it takes 9, 10, 11 months to get done. And in the interim, you could have done 2 flips during that time frame. So newer investors, that's my advice to you. Get a couple different opinions, me, a couple other ones. It's important because if you're going to be successful at this, you want to surround yourself with good people that are going to be doing the work for you and a good, reputable private lender that is, one, lending, but two, it's going to develop that good working relationship with you to ultimately help you grow your real estate business.
Well, there are 3 things that I kind of picked out of what you were just saying that, definitely, new investors need to watch out for too. You said then when you were talking about that, you were saying we're going to look and see that we make sure that we can lend to your company, right? So that's one of the things that, that you're going to learn is that these type of loans are not personal loans. They're not like a mortgage, right? So they're considered sort of commercial. Some people call it commercial, but they're because they're under your company name, right? They're going to be under your company. So you have to have a company, right? And you have to have it for how long?
We consider it to be a business-to-business transaction. And the easiest way for me to kind of explain this to newer investors or anyone that may or may not have been in the game for a long time is after 2008, when the whole bubble happened and the housing crash happened, very shortly thereafter, there were a lot of foreclosures. And lending institutions or private lending institutions, they didn't want to deal with the red tape of RESPA and HUD and all these different Fannie and Freddie changes. So private investors, what they did is they started doing business-to-business loans. This is what this loan is. If you have an entity open season for at least 90 days, we can lend to you. Okay, it can be in any industry. You can have a barbershop and have an LLC or an S corp or a multi-member LLC, and come to us, and we will lend you in a business capacity. So we don't have all that, some of the rules and regulations that you deal with when it's mortgage to consumer. We're business to business, so it changes the transaction a little bit. The mortgage works very similar to a regular mortgage, much shorter term, but it acts a little bit different. So some of the things that we'll ask for are the articles of incorporation. We may ask for an operating agreement if it's a multi-member, just to determine that we can lend to you and we can lend to the entity. And once we determine that, it's got to be in good standing. It's got to be active. It can be a newer one. If you opened it 2 months ago, I can even still do that deal. I just can't fund until it's been open and active and seasoned for at least 90 days. I'm working on one right now. They opened it up a little over 2 months ago. So by the time we get to the closing table and we fund the deal, it will be at least 90 days. So we're okay with that.
Okay. Yeah, and that's something that, you have to have in mind, because sometimes, a lot of investors out there, they're looking at deals, they're looking at things, and then when they see that they're going to get stuck on something, and then you might lose a deal just because you weren't ready. So, the idea is a great idea to, to get in touch with you and, go through the deal, analyze the deal, take advantage of, your knowledge and pick your brain in regards of all the deals. And on top of that, getting a different opinion, right? Because obviously you're doing your own numbers, you're doing your due diligence on the deal. But that sometimes you, Alex, you will look at it from a different point of view. You're looking at it from the lending point of view, and the numbers might be, they might have to be a little tighter, and maybe your offer has to be lower, right? So
Exactly.
and then you have to go back and maybe renegotiate some of that stuff. So I think it's great to know from the beginning, so that way you can do your numbers, uh, you know based on what you are going to be able to lend down, and be able
Absolutely.
to not get stuck, right?
I agree 100%. I
Right.
think that, you know, COVID-19 and the market itself, we were already seeing a little bit of a correction prior to
Right.
COVID-19 in terms of some values or time on the market and less deals out there for investors. On a daily basis, I have individuals that are going to auction, they're dealing with wholesalers, they're dealing with REOs. I've seen prior to COVID-19 some slight changes that are coming. I believe that here in our Chicago market, we're going to see some value decreases, not major, but we're going to see some, and it's going to affect everything. So when investors are doing their numbers, they have to take into account that on the conventional side, those guidelines are changing for buyers. And, whether that be credit wise, whether that be down payment wise, these are all factors that we have to take into consideration
Mm.
when you're determining, is this a good possible fix and flip? And
Right.
also, if it's a multi-unit, hey, I know I want to fix and flip it, but do I have a good enough exit strategy to turn this into a buy and hold? You might
Right.
buy it, fix it, can't sell it, and now you got to hold it.
Right.
If the dollars and cents make sense, we're this is a very strong, at least in Chicago, it's a very strong rental market right now. A lot of the realtors that I talk to, their rental business is picking up steam right now
Right.
because a lot of people are afraid to bite the bullet, large down payment. Some of them aren't working, some of them lost their jobs. So we also have to factor in, if you're going to buy and hold, make sure it's the right property type. The area is very, very, very important in terms of if you're going to be able to rent that and what you're going to get in rent. Is it going to is
Right.
it going to cover your mortgage on a monthly basis? Are you going to cash flow the property? Those are
Right.
things that all have to be considered. And along the way with experience, you'll get that. But I think surrounding yourself, networking, dealing with like-minded, or sometimes I always tell people, you got to be talking to and dealing with people that are smarter than you, that have done things the right way and emulate
Right.
what they do, so that you can help grow your investment business, real estate investment business.
Oh, well, and at the same time, after, by having the experience of 2008, I was in the lending industry back then too, and I was in real estate back then too. So, it was a completely different moment, but at the same time, we saw the amount of people going into foreclosure and the huge shift that we had into rentals, right? All the people that lost their homes needed a place to rent, and then rent just started skyrocketing right away. So obviously that's going to happen again, because a lot of people are not going to be able to pay their homes, unfortunately, and they're going to start looking for rental properties. But at the same time, it goes right back to what we were talking with you earlier, or yesterday. I think it was about, where are you buying the properties, right? If you're a new investor, you got to be careful where you're getting into. You don't have to go into the rough areas to make money. I mean, there is other great areas where you can actually go and still make money. There's still great opportunities. A lot of people, they just jump because it's very tempting, the low price, and it seems like a quick deal and everything. But at the time that you need to sell the property or even rent the property, that might change completely because of the area where you are buying that property. So,
Absolutely. Absolutely.
and at the same time, it impacts the way that you can lend them, right? Where
Absolutely. And some of the things that, newer investors will come to me, and we're both in the Chicagoland area, so I'll speak to Chicago because we lend everywhere, but specifically in Chicago, there's been a huge push over the last couple of years in terms of South Side, West Side, South Shore area, Hyde Park, Burnham, different neighborhoods in and out of the South Side. There are good deals there. Don't get me wrong. You can find cheaper deals down there, and there is a demand for buyers in those particular marketplaces. But the biggest thing that I'll say is there are a lot of other investors looking for properties in those areas as well. And when there's multiple deals that are being done in a particular area, you're going to have a lot of competition, and your numbers had better be right.
Yeah.
Because if you have a lot of competition, then you're all going to be trying to sell in the next 6, 9, 12 months altogether. So at the end of the day, you have to be working with a good realtor that knows that marketplace,
right?
That has a good buyers list of people that are interested in buying in those particular demographics in those areas, because it's going to make your life that much easier.
Mm-hmm.
Or you got to be dealing with a good wholesaler that's picking up properties in those particular areas that are off-market deals that are able to get you deals at a good price point where it's going to be profitable for you. So things that we look at in those particular areas are, as I mentioned earlier, high crime is something that is very important. You and I just had a scenario just the other day where it's a newer investor and it's a super high crime area. From a credit committee standpoint right now, that's risk from a lender perspective.
Right.
You don't have a lot of experience and the area's very tough, and God forbid you should have a large rehab budget as well. Those are little factors that we're looking at right now, that if you have lower crime and the deal's a little bit smaller and your rehab budget is not as high and you don't have the experience, well, we can overcome some of that stuff with cash reserves, good credit, a good area where there's a lot of recent activity in sales, where they can be mitigating factors to lend to you as a newer investor.
Right.
Experienced investors, they know what to do in that market.
Right.
They're gonna make sure they double, triple check their numbers. They're gonna have the right property type. They're working with an agent that's gonna be able to turn that rather quickly for them. And it's less risk, less exposure, and we're okay with that. So those are the factors that we, schools, you have to factor in schools, grammar schools, middle schools, high schools. Is there good transportation in those particular areas? Those are things that you should be thinking about when not just, hey, I can pick it up for $10,000 or $15,000 and houses are selling for $80,000, $90,000. It's bigger than that. We have to, as real estate investors, we got to get smarter. There's more competition than ever before. And, real estate is always and always will be one of the best investments that you can put your money towards. But there's a lot more competition out there right now, depending on the market, depending on the neighborhood, even more. So that's a good point.
No, look, I mean, this blog that we're doing, that I'm doing this real estate talk. I bring other people. I bring other realtors in the past. I talked to Frank Montra. I don't know if you know him. He's the king of the South Side, right?
Absolutely.
He's a realtor that he's been in Chicago for 30 years in real estate, and he knows a lot about the South Side. He knows a lot about investing. He invests in properties himself. That's another thing that you gotta work with people once you putting that team together, is to work with people that actually are doing it right now. Not that they did it, 20 years ago, because the market changes every year. Now we just had a huge change in the last 3 months, right? So you have to be able to work with people that are being adaptable, that are adapted to the markets, and that, even though they've been in the market for 20 years, that they're still doing it, right? So that's super important. So that way, you know how to analyze the deals, and realtors can give you a huge amount of information about the demographics, the crime in the area. And look, Chicago, I'm sure that the other big cities are the same way. It's a block by block. That's what we say all the time here, right? One block is nice, the next block is bad, and you know why. Can be a few bad apples in that block, and then it ruins your exit, right? It ruins your exit. Because,
I have an example on that. We just recently had a deal where a new investor brought me a deal, and being from Chicago, I'm very active for my company in terms of if I think it's a solid area or if it's a solid opportunity, I'll get in my car and I'll drive down there. And my evaluations department said, hey, look at there's 4 or 5 other boarded up houses on the block. This is not something that we're comfortable doing. So I went out there, filmed a video, took some pictures, and I went back to my evaluations, my credit committee, and said, hey, but the next block over has none. And there's 4 or 5 recent sales there. This is why we should do it. It's one, it's helping the community. Yes, it is still risky on this particular block, but I went back to the investor and said, hey, our leverage has got to be reduced a little bit. We're willing to lend you the money, but you're going to have to take on a little bit more risk. And if that's okay with you, we'll fund the deal. The investor came back and said, I'll do the deal. Because he's confident, he's run his numbers, he knows the area. He's done 1 or 2 other flips near the area, and that makes us more comfortable with the deal as well. So those
plus, they have you, right? The boots on the ground, that they know the area. You know the area. You've been living here for a long time, so you know your way around. But at the same time, that's one of the important things that the new investors need to know is that they need to learn how to mitigate risk. And the way that you learn how to mitigate risk is not only not on a boot camp, but actually talking with people like you, right? And looking at different things. Even in the South Side, one of the things that I learned a lot on how to mitigating risk was, on my rental, having rentals with Section 8, right? Section 8 is also, it works the same way. If you have more than 2 or 3 houses boarded up in your block, they're not going to approve your property.
Correct.
You know what I mean? And you can say whatever you want to say. They're supposed to help them, but it's still the same thing. They're mitigating risk, right? Because that's not a good block. So you need to move on, right?
Absolutely. At the end of the day, with COVID-19, it is enhanced mitigating risk. From the lender's perspective, they do not want another housing crash to happen. This recession that we're probably headed for, this is not a housing recession like it was in 2007, 8, and 9. Unfortunately, the banks were burned back then. So they're going to put stopgaps, or they're going to put safety measures in place for real estate investors, for home buyers, to ensure that we don't go down that path again. And as investors, we just have to adapt. At the end of the day, we have to adapt, and we have to think smarter, not harder.
Be more conservative on the thinking, right? Not being so passionate, like you said, on the property and falling in love just because it's a cheap deal. Cheap deal doesn't mean that it's a good deal. The idea is, we always, when we were looking at properties, we always be driving around the area, like you just said, and at the same time, at different times, at night and in the morning. Because, just looking at, trying to see who are the bad actors in the area and see if that's going to affect your selling of the property. Because the people that live there, the neighbors in the area, the people that are going to buy that property are going to be, they know the area. So they know, what's going on in the neighborhood. They know what's going on in that block. And if there is something that you don't know, then you're going to get stuck with it. So
absolutely,
that's part of mitigating risk.
Absolutely. Other questions you have for me?
Yeah. So the other things that we were going to go was to also talk about a little bit about new construction. Okay. So new construction, we know that we've seen a lot of that going on I would say for the last 2 years. Okay. Because, we've been flipping also since 2010. So, and obviously for the last 2 years, we started seeing the shift, a lot of fix and flippers that were doing big projects started getting into more new construction and more new construction, right? So, and obviously the financing was getting a lot easier to do it. So what were the changes from before COVID and now that you've seen?
The biggest thing I would say during COVID till now, I've gotten more phone calls, more inquiries for new construction. That part of our industry seems to be still very, very, very strong and growing. And all indications indicate that it will continue to grow.
Okay.
And the biggest thing that I would say to investors that have been fixing and flipping, ground up experience is very important to private lenders. What I mean by that is, unless you're a national or local builder that has been building ground up or vertical homes, experience is going to be key. And there in itself, I will tell fix and flippers to either partner with someone that's got ground up experience, because that's what the lenders are looking for the most right now. If they're going to lend potentially 80, 75% loan to cost on the acquisition and the build out of a new home, the important things are the experience, cash reserves, and net worth. Those are the key factors that they're looking at for the deal to make sense. If you got a very good net worth, you got good cash reserves, you got the experience, you're going to be able to go down the path of new construction. And I look at these on a daily basis where, I tell people, hey, you don't have the ground up experience, you got to find a partner that has ground up experience.
What about the reserves? Are you looking for the same type of reserves that you look on a fix and flip in regards of the term, or because I'm assuming that the terms for new construction, are they a little bit longer or the same?
They're a little bit different. Fix and flip is generally anywhere from 6 to 12 months. Right. And when it comes to new construction, we do 18-month term on that. Okay. Plans and permits are very important on new construction. Not so much in the city because we're dealing with city lots, but in a little bit more rural areas. Has it been separated? Has it been zoned for whatever it is that you do want to build on there becomes very important. And there's going to be some soft costs associated with that. We will cover some of those soft costs on the deal as well. The biggest thing that I would say is have your plans, permits. If you've bought the lot, we're going to be able to use some of that acquisition towards money already in the transaction as well for you. If you haven't, we can do transaction on the lot as well as the new construction. We even have a program out there that, hey, it's a phase 1 and phase 2. Phase 1 is going to be the acquisition, and it's going to take you 3-6 months to get plans and permits. We don't need to be financing the new construction portion of that in that first phase. So we'll do an acquisition loan for the land or the lot, and then we'll do a phase 2 that's going to include the actual construction portion of that loan. So we do have that product in place as well. Okay.
And so, and on the land, usually what's the LTV that you usually lend? I know that some lenders only will do up to 50%.
Correct. Generally speaking, any land deal right now, it's very difficult to get done. And forget about us in general. Getting a land deal done, you're right, it's 50%. We will, on our new construction deals, we'll do the land, but we want to also see the land and the new construction acquisition simultaneous. We don't want, hey, let's do the land and we'll worry about the construction.
We'll figure it out.
We're not doing that right now. So now, land and new construction.
Right. Yeah, all together. So, all right. So, and then in the construction side, I'm asking you because I do have a developer in Lake Geneva that is looking to do something over there too. So, in the side of the construction, what would be the percentage in there too? Are you going to be around 75 as well?
The new construction,
for the construction part of it.
So whether it's acquisition or the new construction, so let's consider them as one. If he's already bought it, typically, depending on whether they fall into our A or B tier in terms of new construction and fix and flip experience, 80% on the new construction, at the high end, on the low end, 75. Okay.
Yeah, no, definitely. These guys are, they have a lot of experience on that, and they're looking to, these new development that they're looking to do is in a golf course area, close up neighborhood. They're already being built up. It's just a small portion that wasn't built up that they're looking to finish to do it. So, but at the same time, so you're going to be looking at the same time of reserves also, like about 18-month worth of payments or something like that?
Yeah, so our term on our new construction is 18 months. Sometimes on new construction type deals, what I like to do with some of my borrowers is build in potentially 6 to 12 months of interest reserve payments on the deal, if all
Right.
the numbers make sense. Because, the way these, whether it's fix and flip or new construction, it's a reimbursement type situation. You're going to use
Right.
your money to get these projects started. You're going to put a request in for a draw that sits in an escrow account.
Mhm.
And then you may have 6 to 8, sometimes 10 draws on a particular project, and you put a request in. It's for work in place. We send an inspector out there. They review everything, make sure that it's been done properly. It's in place. What you're requesting your money for is on site. You can't have it at a warehouse down the block and say, "Hey,
Right.
cut me a check for this, but we're going to install it at some point, maybe in a week or two." It's got to be on site in the property. And what we'll do is we'll send an inspector out there, they'll review it, sign off on it. 2, 3 days later, we send you a wire or a check or
Okay.
whoever you instruct us to send the funds to on that
Okay.
particular job.
Would you guys do any advance on the closing to start up the project or not?
At this time right now, I would say the best bet would be any soft costs. We would do it in advance. Any soft costs that you've experienced already, I can do that.
Okay.
As far as an initial draw for, hey, I need to demo the property or things of that nature, I can
Foundation.
I can always request it. The likelihood right now, if the more experience, the
Right.
better opportunity you have of getting that okay. Less experience, probably not in this environment that we're in right now.
Right, absolutely. So, well, yeah, at the end of the day, we're going back again to the experience and the liquidity. Where those are the two main things that we talk about today that you have to have in mind in order to get done any deals, rentals, fix and flips, or even new construction. Right, it's all about liquidity and experience. So definitely.
Going back to what you asked me here today with COVID-19, the biggest thing that I have seen is more skin in the game, cash reserves, experience, and we're starting to now see a little bit of a conservative downgrade on some values. I don't know if this is premature or if this is a trend that's happening, but I am seeing it a little bit. And that's not just here in Chicago, that is nationwide. I'm seeing it.
Yeah, well, I mean, even for us, I mean, when we make our offers, right? Usually when we calculate our offers, we go about, we do the same calculation as you do, right? Which is the 75% of the ARV. That's, minus our construction. That's the offer that we make, or less. But now we're going down to 65 or 60, trying to get better deals. So that way, just in case the prices go down. Yeah, for sure.
Absolutely. I think everyone right now has to be mindful of putting a little bit of a buffer in there on those deals to make sure that if there's an oversight on a rehab or a construction cost or just time on the market, those are carrying costs that you have to factor in, that you got to make a payment, especially if you're borrowing money. You got to make a payment. Even if you decide, hey, I'm gonna keep it, I'm gonna refinance out, I'm gonna rent the property, that's okay. But you're still gonna have insurance expenses. You're gonna have property tax expenses. You're gonna have carrying costs that you have to factor in.
Right.
And that goes back to your point earlier of networking, being around people that have done it and that are doing business, so that you don't do one deal, get burnt so bad that you lose your shorts on a deal, and then all of a sudden you're out of the industry.
Well,
That's very important.
that's why I think that, the scope of work of the deal is so important. You have to be as detailed as possible, just to make sure that every single detail is included in there, because if you miss it, then there's no going back for it. So you're going to have to pay it out of pocket. And going back to what you just said about, the networking and, learning from people that are already done it. I think it's great now that there is a great sense of people that like to share their experience. Right now, if you go to to the RIOs or to the networking meetings for investors and stuff like that, and you will sit down and talk to an investor, someone that has been on doing this for a long time, and they will give you a lot of knowledge on based just on the experience that they have. So there
Absolutely.
definitely is someone that you've got to look for people like that. They're willing to share, and that's one of the things that we do here too, right? And this real estate talk is about sharing this information so they can make better decisions and be better real estate investors.
Just to piggyback on that, I think right now, this the last couple of months with COVID-19, what I have experienced is a lot more of a receptiveness on online communities. Of course, we're communicating through video much more these days. But even in my daily activities, in terms of being on LinkedIn or being in Facebook, different groups or online groups in terms of real estate investors, this is a good opportunity for seasoned investors as well as not so seasoned investors to be online, communicate with other like-minded individuals, whether it be on
Absolutely.
Facebook, LinkedIn. There's a couple of websites I give you is Connected Investors. There's different online sources that you can use for a couple different things.
Yeah.
If you're an inexperienced investor, you can collaborate with people that are also inexperienced that are looking to do deals, and you might pull together and say, hey, listen, you know what, I need some private money here, but I'm inexperienced. Maybe if you're going to online networking events or meetups, you can do deals. There's a lot of wholesalers or other experienced investors right now that are willing to JV, do joint ventures with
Mhm.
real estate investors, and I think it's a good time for that, especially if you're trying to get some experience.
Absolutely, absolutely. And plus, I mean, that's something that you are looking for, right? So the experience, and that is something that I was talking to an investor earlier today, someone that is actually starting to get into investing, and his partner is the one with experience. So I said, well, that's how you have to piggyback in the first few deals. Get some deals under your belt, and then you can start getting on your own, doing some other deals on your own too.
Absolutely. And I say that to wholesalers all the time because, I'm always in communication with wholesalers.
Right.
Wholesalers are
Right.
just, they're turning their paper over to the end buyer.
Yeah.
Well, at the end of the day, they serve as a resource for me and my business from the standpoint of they have deals. So I can bring my investors deals, and they can use me for their funding, or
Absolutely.
they have the buyers, or they're working on buyers. Because if they don't get a particular buyer,
Right.
they're stuck with that paper. They either have to go get their own loan, or they have to, ask for an extension, or whatever. But at the end of the day,
Right.
I work with them because, listen, there's 70% of my competition during COVID-19 either suspended or halted their financing. Now,
Right.
little by little, they're starting to come back, but I can tell you, I wouldn't even call it they're coming back. They're coming back, they're lending, but
Mhm.
their leverage is so low
Right.
that no one's going to use them for financing. What?
Right.
Because interest rates are so high, their points are so high, or they're at like 60, 65% ARV.
Yeah.
And it's difficult to get a deal done on that type of leverage. So it doesn't make any sense for a real estate investor because you got so much skin in the game that now you're scared to do a particular deal. Does that make
Right.
sense to everyone?
Yeah.
So those are factors that you have to take into consideration. I'm all for shopping around, talk to A, B, C, and D, but you have to find someone that's going to work with you, you can trust, and you can learn from. At the end of the
Yeah.
day, you have to be a sponge and you have to learn from everybody out there, and so that you can grow your business. At the end of the day, it's bettering the communities and growing your business. That's what it comes down to.
Oh, look, hey, absolutely. I think that not any account rep out there, not any lender out there is gonna give you the information and all the stuff the way that you're sharing today, Alex. So I really appreciate you coming today and sharing all that. You're a wealth of knowledge, brother. So I mean, definitely,
Thank you. I appreciate it.
any investor that work with you, it will definitely benefit from that. And there's nothing like having a lender that can help you actually get your deal done, or actually tell you whether your deal is a good deal or not, or just walk away from it, right? The idea is not about going after the money. A lot of lenders out there, they're just going whether they just want to close deals. But at the end of the day, it's a relationship game, and I think the more that you're able to help those real estate investors, the better relationship that you can build, and do more and better business for sure.
Thank you.
So,
I appreciate that.
Alex, thank you very much. Just quickly tell them how they can get in touch with you. Either way, I have a little slide that I'm gonna share with everyone, where I'm gonna put your phone number and your social media. But if you wanna, give them the information that you like to give them, so they can get in touch with you.
Absolutely. So I'm with Anchor Loans. It's anchorloans.com. My phone number is 773-709-6484. Again, 773-709-6484. If you want to shoot me a text, I'm more than happy to reply back. Or if you'd like to send me an email via text, I can email you some additional info and a link to my contact info, as well as a link to our website that tells you a little bit more about who we are, what we can do, and how we can help better the communities, as well as help grow your real estate investment business. Thank you. I appreciate the time today.
All right, awesome. Thank you very much, Alex. And next, I'm going to put up his information, where we're going to put. You can get in touch with him really quick. These are his phone number. Again, you can reach out to him at 773 709-6484. If you like to speak with him and get quote or anything in regards of that, definitely you see how much information he can provide to you, and it's something that you need to know right before you get started on your business. Okay, it started investing in some of these properties. Even more so today, you need someone in your corner, okay, that is going to be able to help you. Okay, and I think Alex is a great guy here from Chicago that can do that for you. All right, so next I'm gonna show you my information. If you want to get in touch with me, definitely get in touch with me through social media. Let me see, what did I do with the information? So my information is right here. So that way, if social media is the best way for you to get in touch with me. Definitely Facebook and LinkedIn are some of the two that I'm most active with, and also Instagram and Twitter. But either way, feel free to get in touch with me, and I'll be glad to give you more information. For us, the last thing that we're going to do is to give you a word of our sponsors too. Our sponsors, we had a great sponsor this week with National Corporate Credit that actually is going to help you get the extra money that you need for your deals. Remember that we were talking with Alex about what is it that they need, and one of the most important things is leverage, right? Money, the funding that you need for your down payment, and the money that you need for your reserves. So National Corporate Credit does unsecured credit, and this is one of the best partners for private lending, right? Because this is completely unsecured, and it's not going to put a lien on your property. So we can get you unsecured business lines of credit up to $150,000, or term loans, which is liquid cash, up to $300,000. Okay, any of those within 7 to 14 days. So right before you get to your deal, to your closing, you can have that money ready to go and to close. Okay, so if you want more information about that, just give us a quick call at 847-220-7247, or just go to getunsecuredcredit.com and set up an appointment right there, and we'll talk to you right away. All right. Thank you very much, everyone. I really appreciate you. If you've been watching this live, or if you're watching the recording, I really appreciate you watching. And next week, We're going to start changing the way that we do it. We're going to do it now every Tuesday and every Thursday. And we're going to be bringing more people in the industry to share with you different ways to improve your business or different ways to just to get more funding for your deals, or wholesalers that can bring you deals in your area. So many different ways that we have in the works to help you get your real estate business better and better and get through this crisis. This crisis is got nothing on you. Okay, so definitely I appreciate again. Thank you very much, and I'll see you next week.